Richard, Standard Chartered, the Asian bank listed also in London, announced results today. They also are asking for more capital. Why is the new-ish chief executive asking for more capital?
Bill Winters he's been there since about February. He has had a good look at the bank. He's had time to have a good look at it. He's even started tweaking some of the management. But I think he's also realised, and he's realised that the revenue line is crumbling somewhat. It's down in the third quarter, also out today, by almost 20%. Bad loan trends are going the wrong way. Non-performing loans are rising. But he's also done that usual thing that all newish CEOs do, which is a bit of a kitchen sink cleanup.
Clean up
so
as quickly
hence
as you can.
the capital raising. But there are other reasons.
Yeah, and was it enough capital to make a difference?
Well, here's the thing. He's raised $5.1 billion, roughly the same as the bank did only 5 years ago. The question is this a regulatory thing? Is it because of the bad debt performance? Or is he being cautious because there's more litigation coming, perhaps from left field in the US? So it looks to me as though there's a precautionary mode here in the capital raising. But still, something just tells me this is not quite enough.
Not enough, but why particularly? I mean, you mentioned something about commodity.
Yes, and
loans
the commodity lending has been problematic, and we don't know that we've seen the end of it. They're going to start restructuring or exiting about a third of their risk-weighted assets. So that should flatter the Core Tier 1 capital ratio a little bit if they shrink the risk-weighted assets denominator. The thing is that the general quality of the book is still a bit of a mystery. I think that Bill Winters has been rigorous in cleaning it up, so the capital may be enough just for that, but I just don't think it's enough for what might yet come. And he's been rather, if you like, rather shy in setting returns. I think, you know, a bank CEO that's setting a return of 10% by 2020 is more or less saying, well, no one knows what this is going to be.
Yes, and so what was the reaction of the market to both the capital raising and what he said?
Yes, well, the shares were down about 10% when I last looked.
It is a rights issue.
The rights issue, you'd expect shares to be down, and I think the rights issue is relatively well priced in. They're down about a third since the end of July anyway, when rumours first really gathered momentum. So I think the jury is out on whether this has been enough of a raise, or whether after the bank stress test, the Bank of England brings out stress tests in December, whether it's going to have been enough. And it's just the timing doesn't feel quite right.
Okay, great. Richard, that's very interesting. Thank you.